Hey, good evening traders, 9:25 here in the UK. We're 35 minutes from US close, and it's been a pretty odd day. Tech has been battered based on Netflix dropping around 40% earlier in the day. And then the rest of the day has been dominated by predominantly dollar selling. It rejected the 101 level, but what charts are really in focus and what we're looking at? Well, you're probably bored of me saying it, but timing and bias is hard to get. So you can have a bias that something is going to move in a certain direction by looking at a multitude of factors, from technicals through seasonality, through commitment of traders, and the market could be in the right place, but yet you don't actually get the follow through that you're expecting. You get an initial move, then the market comes back to where it was. You get another move, then it comes back to where it was. But yeah, during that whole period of time, your bias still remains the same, that you're looking for a particular move. And for me, we're still looking at pound longs. We really are focusing on looking at pound longs. We've taken a couple of trades. We're holding one still. We've exited an intraday trade today, up at the 13060 level, and you can see right now price is close to breaking it, but intraday trade, don't want to hold it through this area that's rejected several times. So we're going to see if we can literally look for another opportunity to add in from this level at some point tomorrow. We have had an excellent entry in at 1.3 spot on the dot, and we traded it up here, I think 1, 2, maybe 3 times, and been stopped on our original position, where we've taken profits and then been stopped, taken profits, been stopped, taken profits, and the third position still running. So as it stands, this is hopefully the one that can see us to the top of this channel. Let's take a look at the bigger time frame, so we can look at it from a technical perspective. So yes, we can see that we're in part of a descending channel, and if we go up to a higher time frame, whether we look at it on the monthly, you could probably argue that it's just a monthly correction after seeing the pandemic bottom down in around the 2015 lows at that 1.2 level. So we got Brexit, pushed it down here, then pandemic pushed it right down to 114. But you can see market closed, and we've really struggled to close below this area at 1.21. Then the monthly came up to 134. We pulled back. We had that explosive rally up to 142s, which we see previous structure over to our left. So let's just highlight these in, just in case you're not following what I'm saying. So we've got this clear level that's been rejected here on the monthlies, and we've got clear resistance level here at 142 that's been rejected, and then an intermediate level through here around 134s. The market then broke higher, and then we've been in this corrective phase, which when we look at the way the market's moved, we had a similar move here, a correction, and then a move back down to the lows. So what we're seeing here is we've gone back to the top, we've had a correction, and I can see the market potentially moving back. Whether we go all the way back up to 142 is a different matter, but this correction period that I'm going to show you back on the daily is where I think we'll go back up to the top of, which is around this 134. In and around this area, which might correlate nicely with this 133.77 swing low, but somewhere in and around the top of this channel. How the market gets there, whether it's going to be an explosive move or whether it's going to be a slow move, we will never know. So I'm looking at holding this original position and then looking to add in maybe 2 times maximum, 2 or 3 tops, to try and make the most out of this particular trade. Now when I say add in 2 or 3 times, that means the next 2 trades or the next 3 trades, I'll be looking at keeping a proportion of the original trade and running that as far as it can possibly go according to my management rules. It doesn't mean that once I've got those 2 or 3 trades in, I won't trade, let's say, the rest of this move here. I will, but just purely on an intraday basis, where I'll be looking to get in, get out. The highest probability of success in terms of capturing the biggest part of the move is the earlier you get into the move. The further the move goes, the lower the probability of success. So if you're taking trades down here, the probability of success of this trade moving all the way down is diminishing. So it's through these areas you just want to be, if you are trading and you're still bearish the pound, then you want to be trading it on an intraday basis rather than, I would say, a swing basis. So that's how I'm going to look at trading this next section. Things to look at and how we can potentially look at getting involved in some further additional trades will be some key structural points to watch. One that's being formed right now, and if we just look at the short-term trend line that is being created through here. So I'm looking for price to potentially pull back down into, if we drop down to the hourly chart, I'd like to see price actually pull back down into this area again tomorrow, which is around 130.40. Failing that, if we don't get into this area, then I want to see a push higher, and then I'm going to look for a corrective move back into around 130.50, 130.60 to take that and look for original sort of TP1s around 131, and then we can look for a break and retest of this area here to trade the next higher low. So that's going to be in theory my next two trades, and this was a key area for the market to break. As you can see on the hourly, we broke through that, then we've been stuttering through this area today. A move above that, then I can't see why we won't touch 131, and this is going to be a key area to then that next sort of move towards 134. Now I'm going to explain a little bit more why I'm so bullish on the pound. Let me just change my pen color 1 second so it stands out a little bit more on this chart. I'm going to use yellow. So what I want you to focus on is, this is a weekly chart of the British pound. It's the futures market, and as you can see, as price as price moves down in this area here, what we can see is that it's still blue. It's not what I wanted. Let's try again. Color yellow, and as price moves down through this area here, you'll see that this green line down here, so this green line represents the number of long contracts that commercial buyers have in the marketplace. So as the long contracts are increasing, that means commercial entities are buying long contracts in pound. You can see that the pound is actually devaluing. Now why is that? Well, think of it this way. Commercial entities use the marketplace not to speculate. They use the marketplace to facilitate transactions. So these will be organizations that have premises in, say, USA, Europe, UK, Canada, Australia, New Zealand, Japan, China. So they're going to have bank accounts full of currencies, of all the global currencies, and what they're doing is they're moving currencies from one country to another country to pay taxes, wages, rents, property maintenance, manufacturing, you name it, everything that's involved in businesses, marketing, lawyers, everything involved with businesses, insurance. Now, if you own a business, you want to, and a very easy example would be, if, let's say, Starbucks, their primary commodity that they acquire to produce their product is the coffee bean, right? So let's pretend this chart we're looking at right now is Starbucks. So Starbucks can't change the price that they sell a cup of coffee on a day-by-day basis. So what happens, or what would Starbucks do if, when they were buying coffee beans to produce their coffee, if the coffee bean starts, or to buy a ton of coffee, starts to decrease in value, are they going to buy more of it, or are they going to buy less of it? If they buy more, the cheaper it gets, they're securing more of a profit when they make a coffee. So what that means is, if the coffee bean was appreciating in value, Starbucks won't buy as much as they possibly can. They'll buy what they need to, waiting for the market to potentially start to depreciate, and as it depreciates, they'll start stockpiling. They'll be buying more, because what this does is this future proofs profit and margins. So they're not using the market to speculate, they're using it to facilitate business transactions, but to forecast and lock in what they see profits. And it's the same with currencies. You know, as an organization needs to pay wages, if they can move some of their US dollars and buy pounds with it and pay their UK companies wages, rents, taxes, whatever, with a pound that may be 20% cheaper than their dollars, then all of a sudden they've just locked in 20% profit. So hopefully that makes sense how the commercials use the marketplace. And what we're looking for is we're looking for these extreme areas. So what caused the market to rally here? Well, commercials were excessively buying, and you can see the long contracts really increasing through this period, and the market bottomed out. And what happened? As the market starts to rally, the commercials start to lose interest and start selling some of their long contracts. They start offloading them. And we can see a similar scenario is happening here. The market has been devaluing, it's been pushing down for a period of time now, about 8-9 weeks, and what we've seen is we've seen a continued increase and appetite of buying of pound. And this is another major factor why I've been really interested in looking for those pound longs. So this is pound CAD, pound Aussie, pound Kiwi, pound Yen, pound Swiss, cable. All of those markets I'm interested in. It's just which one gives me the best technical opportunity. So we highlighted pound a while ago. We've highlighted pound CAD. This is one we're looking at. Let's take a look at a couple of other pound pairs. I know I've sort of rattled on a little bit. Now pound CAD, this was coming off a weekly trend line, and one thing we can say about pound CAD is we're not seeing the reaction here that we would potentially like. We've got a marked out zone to look for potential long opportunities, and what we want to see is we want to see if this market double bottoms and we can find a potential move higher and get above the blue zone. So we're looking for a potential double bottom. Do we see any potential divergence? Yes, we do. We can see that the market has effectively double bottomed, and through this area here now we've got a higher low forming. Let me just change the color again so you can see it on my charts. So here we've got the market creating a higher low on MACD and a flat bottom here. So what we're looking for is a move higher, higher low, and then we can start to go again. Now for those that are a bit more aggressive and think that they could potentially look for trading opportunities where we currently lie, well, you're going to have to look for a change in cyclical pattern before you can get long. Now if we look at the hourly chart, nothing here, still pointing to a bearish market. We've got a low, lower high, lower low, and we're still in a correction. Looks like we could potentially have another drop down again in the maybe through the Asian session, early hours of the London Open. If that happens, it's not a problem because it could give us our opportunity for that double bottom to trade the higher low here back up into this area of 164.80. Plenty of room to do that, so keep your eye on this, but the safest opportunity is longs above 165 should we get there. Right, let's take a look at pound Swissy. So pound Swissy was a market we went long previous week. Hopefully you got that from our YouTube videos, which we looked at long through this area here, and we've had a monster move on this, and then we've also looked at longs as we broke this flag pattern through here. You can see it was a perfect breakout, retest, and then we've gone again. Now we're in an area that I don't really want to trade from because you can see how close we are. We've got structure here, we look left, we've got keen resistance level. Price could potentially rotate lower back into this area or even all the way back down here, and then we could look for longs. Now there's a reason I'm not really interested in looking at pound Swiss, and that's because dollar Swiss looks good short. So if cable looks good long, dollar Swiss looks good short, that means you're buying both pound and you're buying both Swiss franc. So why would you want to trade them against each other? If pound looks weak, if dollar looks weak and pound looks strong, just trade that pair. What else do we have? So pound Kiwi. Well, this is very similar. As with Aussie, every market is now starting to look quite strong against the US dollar. So you're much better trading against the US dollar. So even though pound is strong and the bias is there from the commitment of traders, the bias is there from the seasonal analysis, my preference would look like trading against the US dollar. because seasonal analysis says that April is the second weakest month of the year for the US dollar. Now remember, it's a timing tool, it's never going to be exact. It could just be the last 10 days of April where the dollar gets slaughtered, and it may only just finish down slightly for the month. But according to seasonal analysis, that means that seasonality was right. Dollar finished down, pound finished up, Aussie finished up. So even though dollar has been very strong for let's say the first 20 days of the month, it could very much unravel that the seasonality was right, it just was slightly delayed. So bear that in mind on how to look at seasonality, how to look at the charts, and then start to bring it all together. So pound Kiwi, we had a trade on this as well. You can see we did come out maybe a little bit early. I didn't leave any on this. Was looking for another opportunity to get in. You could argue that there was maybe an opportunity here when this market pulled back down and came and tested this previous low over here. So we had low, lower low, first higher high, then the market came down, test the same price point, equal highs. We could potentially look for a rally from in and around 191, but that's going to be my lot for pound pairs tonight. I don't want to overdo pound and completely bore you with pound. Let's take a look at euro dollar. Now, why are we going to look at euro dollar? I'm bullish euro dollar as well. We've got a trade running on euro as well. One thing I do want to highlight about the euro is, if you are in any euro trades over the weekend, I probably wouldn't say hold anything over the weekend, and if you are, make sure you've got them at break even. Not that that will potentially help, because it's the French elections on Sunday, and depending what the result is, you could see big gaps down or big gaps up. If Macron gets in, we're probably going to see a bit of a gap up, depending on how much he wins by and what voting rights and etc. But if he doesn't win, we're probably going to see maybe a significant gap down on the euro. But listen, that's all hearsay. Let's see what happens. So I'm a bull of euro for now, for the short term. I think Macron will get in. Who knows by how much? But let's take a look at it technically. So if we go to the weekly chart, we've been looking at where's my trend line gone? Interesting. 1 second, guys. Okay, I'm going to draw them back in. So my trend lines have disappeared. So effectively, we've got a monthly trend line going back a long don't know where that just disappeared to either. Anyway, you could see the trend line that I was referring to. I'll just put it in again very quickly for you. So we've got this long-term trend line here that's in play, and the market has respected it. Ideally, I want to see the market close above it this month. Going to the weekly, we can see that the market is running out of steam. Obviously, we've still got a couple of days left of the weekly candle, so a lot can change. We could potentially break above the previous week's high, or we could finish as a bearish candle and create new lows. Going to the daily chart, we can see that we are seeing a slight difference in momentum. And if we just look here, we've got a lower low in price. Let's just draw this in. We've got a lower low in price. We've got a higher low in our MACD histogram, indicating a potential push higher. Now, whether we just run up into the 1.12, which is where my targets are, or we go higher, is a different matter. I'm looking at this market, but a key area that we've got to watch is just above this 1.09 here. I've also got initial targets set through this area to take some off, and I will leave 20% of my original trade on to go through here, but then I'll be looking to add in on a break and close above this area here. So what we're looking for on the smaller time frames, and how can you potentially maximize any profits from this? So what was the trade that we took? and how do we get into it, and then potentially what can we look for next. So it was a very simple double bottom expanding pattern here. We had an initial break above, and then we had a correction. Now as the correction was pulling back in, we could see the momentum fading, and all I had was a 15-minute, well, you could say 15-minute. It was just as the market came into here and it started to correct back. I used a 15-minute time frame, but it's still the 4-hour high. It was a break of this high after a correction, and I was using the original swing low on the 15-minute chart. The market came down, broke through, and we've continued to push higher. First take profits on this was around 40 pips. I think it was 1815, so it was around 1855, 108.55. So we hit target through this area here, so just below these wick highs. We've not added anything else into this trade yet because these two 4-hour candles don't look overly bullish right now. Yes, we've had a bullish close with a big wick above it, but you know, any break below these lows, we could potentially see another move back lower again. So they're not looking excessively bullish, and you know, I put that right down to what's happening in France this weekend. So I don't expect any explosive moves up until Sunday open really. So just watch out, see what happens, but keep an eye on 109.40 as your benchmark for further longs, because any move above there, that's going to be a key to get long. Where we currently sit, if there are any opportunities, if we do push higher and you can take a trade from in and around this area here, 108.40s, 108.30s, then that could offer a decent opportunity for a run up into 109.20s. And I'm going to leave it at that for today, guys, because this is our second video out today. We are catching up a little bit after Easter weekend. We did take a little bit of a longer break, so I do apologize that not much content came out for about 5 or 6 days, but we're going to try and get you back up to speed and get you making some pips. If you've got any questions about any videos or any content you'd like us to produce, please comment below, or drop us an email to mark@tradeandtrain.com. We will be hosting another live trading session through US, probably not next week, but the week after. If you're interested in that, also drop me an email and I'll keep you in the loop. On that note, guys, that's it for the end today. Give us a thumbs up, like, share and subscribe. And you probably wonder why we say to hit subscribe. Now, the video that we posted this morning, there was a trade alert for watching WTI to potentially go to $100. So for everyone that didn't watch that video when it was released this morning, i.e. those that subscribed, will have missed out on that trade, because we sent it out as an email later on this afternoon, and it's a prime reason why you should subscribe to people's content that you like. Because you know, if you don't get round to watching it there and then because it's not delivered directly to your inbox as the information is published, then you're probably going to miss out on some great opportunities. So if you are following us and maybe any other people that you like, make sure you subscribe, because what that'll do is that means that as content is published, it's going to come straight to your inbox and you can just skim through it and look for the bits that you're going to appeal to, that works for you, and guess what? You'll find that you start missing less opportunities, and that's what life is all about, right? Make sure you miss less opportunities. So have a good evening, guys, and we'll see you tomorrow. Bye bye.